Hey, what's going on? Teach Me to Fish. I am here back with you guys with some trade alerts, analysis, some further teaching on the workflow trading template. All right, and so again, this portion is a part of helping you to earn while you learn. Also, again, trade alerts, also some analysis, and also some teaching going to help you better with your trading the workflow trading method and using the workflow trading template. So, all right, let's go ahead and jump into it. If you guys don't know, you should know by now. Hopefully, you've been watching the videos. You subscribe to the YouTube channel, and you get all of the updates. All right. They're general videos, but you guys know what's going on behind the scenes. Don't tell my wife that I'm drinking soda. So, but anyway, we're gonna start with GBP and ZD. The pairs that we look at are the pairs with 100 plus pip movement, ADR, which is the average daily range. All right, and I'd like to check that over the past year. All right, so GBP and ZD, you guys know, you should know by now that we trade based off of the reversals from the accumulation and distribution zones on the weekly chart. All right, that kind of ties into the COT training, the Commodity of Traders report that I shared with you guys some time back. Okay, so that helps us with that. And so again, you guys are getting in-depth information. Please don't go out sharing this information that I'm providing with you because I mean you're paying for it, so you don't want to give the information for free. So, but we're basically trading the reversals off of the accumulation and distribution areas of the COT. And then we can also, with our exhaustion levels, which are these golden squares, we can trade off of different support, resistance, supply and demand areas in the market in between the accumulation and distribution of the weekly chart. So the very first one, that's kind of why we are looking at the pairs that we look at, okay, and kind of what we're trading. So first pair is GBP and ZD, and of course with this pair, we see here the week before last, towards the end of the week, that was Friday, the January 31st. We see where this 4-hour candle tested up into the accumulation, the distribution, the weekly distribution area here. All right, we got our exhaustion indication, okay, and our some other things we're gonna you want to look at is exhaustion at or in the weekly accumulation or distribution zone. In this case, it's a distribution zone. Distribution zones are at the top. Accumulation zones are at the bottom. Okay. And so that's sign number one. All right. Sign number two is we have our directional arrow right here. Okay, the white arrow pointing down, and that came. It came about, let's see, that's 8, about maybe anywhere between 8 to 16 hours, because this candle will actually start printing before. Well, I take that back. This candle will print, or the directional arrow will print typically after this candle has closed and this candle is working. So sometimes you'll be able to catch it at the close of the directional arrow candle, or while the next candle is forming, or when it closes. So that's second confluence, third confluence, is our volume. You just look down here, I have it minimized or I have it squished down a little bit, but you guys know with our volume we have a simple 20 period moving average, okay, or a 20, however you say it, okay, it's a 20 period simple moving average, or SMA, or 20 SMA, all right here in our volume. So we look for volume to peak its head above the 20, okay? And so on the exhaust candle, we got that in a little bit. The directional arrow candle, we got that, and it closed below the 13, so it would have been safe to get into this trade, okay? That about right there. So that's that. And so we're looking at this pair. Now, when you're looking at your pairs, you want to watch one thing that I do, whether it's the same computer or another computer, I look at the myfxbook.com because checking for high impact news. All right, and looking at high impact news for the rest of the week. There are no GBP, but there are Euro. There's Euro high impact news for tomorrow. All the impact news for today is complete. So for tomorrow we have Germany, we have Euro, and USA. So the GBP pairs are looking good. You just probably want to, if you're not comfortable, stay away from like your GBP USD, your Euro USD, your Euro pairs, any type of crossing with the USD pairs. That's only if you're not comfortable. All right, and I just recommend, just if you can, stay away from those pairs, and I'll show you the pair that I'm recommending right now. But again, just showing you guys some of the confluences and trying to answer some of the questions for you guys. All right. Also, if we take a look down here at the TDI, what I've placed on here are two horizontal lines, one at the 70 price point or level and the 30 level. Okay, just going back to our example here, like this is the Mona Lisa for us, right? This is what we look for when trading. This is like we're looking at our chops, okay? When we get these type of trades. Exhaustion level inside of accumulation or distribution, all right, on the weekly. We have a directional arrow and it closes below the 13 EMA. We have volume, all right, indicating that the market makers are behind the move for the type of candle that it is. It's a large shift bearish candle. All right, so the volume behind that is like, okay, it's letting us know that this market is pushing down. Now, if it was a candle with a long wick on this side showing rejection to the downside, then no, yeah, we won't get into that. We'll just kind of wait for another opportunity to get in. So you look for that. When the candle crosses the 13 EMA on the chart, you look down here at your TDI, all right, and you check to see if that green price line has crossed below, in this case because it's selling, so it has crossed below the red, I call it the signal line, and the yellow sentiment line, and then you want to get in. So really this candle right here, I hope you guys can see that, excuse me, this candle right here would have been the candle for us to be safe to go ahead and get in, because again, we have our exhaustion level, we have our directional arrow, we have our close below the 13, we have volume on this candle, and it's also the green price line has crossed below the red signal line and also the yellow market sentiment line. Okay. And then typically for me, I'm looking for at least one ADR. You may want to back it up to 100 pips. Hey, you grab your 100 pips, that's great. And so potentially at the very bottom of this move, we're looking at 199 pips. One ADR was 176. All right, and so we would have gotten that. Okay, we would have been in profit for about 8 hours. Okay, and then the market would have went against us, and we would have had a deficit of looks like 2 pips, almost 3 pips, before the market would have then pushed all the way down to give us our possibility of 199 pips. All right, so 199 pips, but in all actuality, you probably would have gotten this signal that price is now exhausted right here at the 2-spot price point, psychological price point. Okay, and so you would have waited for that to close. So in all actuality, you probably would have got 155 pips instead of the 199. Okay, and so that's also how we get out. Once we're basically trying to ride it from exhaustion to exhaustion, but in our case, of course, we're going to wait for all of our trading rules to be met. And really, if you want to simplify it, just you're looking for getting that exhaustion level, and then the close below the 13 EMA along with the close below the red and yellow line on the TDI. Okay. Another good indication is your overbought and oversold levels on the TDI. All right, the 70. Okay, the 70 level is overbought. So hey, you can look for that green price line to go above the 70 and wait for it to cross back. Cross back over or to cross the 70 again. And so even with that, so that candle right there, really it's still this candle right here. All right, even with that, even if you just want to look at that, okay, hey, my green signal line, it crossed above the 70, and so now it crossed above the 70 back here. Let's see. Okay, so this candle right here, right up under the 2-spot psychological price point, right? It crossed here, and so basically from here, you're waiting for a 12, 16, 24, 32. I hope I counted that right. Excuse me, 30. Oh, let me start over. I can't count. Where we're at right here. So that would have closed. So you're waiting for a 12, 16, 20, 24, 28, 32, 36, 40, 44. I'm just trying to make sure I get it when it crosses back over. 48, okay, and 52. So you're waiting 52 hours. All right, you got the signal. And again, we talk about patience, practicing and exercising patience. Patience is key, and that's what kills everybody. Because no doubt, someone would have saw that shark fin and jumped in back here and been in a high deficit, and they didn't even have to. But patience is key when trading this. Okay. So I crossed back over again. So what do we say? 50 something, 56 hours or something like that. All right, just patience to come in and grab 155 pips. Okay, and again, I like to use the standard lot size, which is $10. So you're talking about 50. You're waiting 52 hours to potentially get 155 pips. So you're looking at over $1,500 in a matter of again, we would have got in here. So in a matter of a work week, all right, so that's 21 4-hour candles. All right, so you're looking at about 80 hours. So in a matter of a 2-week period, you're making $1,500. All right, that's not bad. That's not bad at all. So let's take a look back at that. I was trying to. Okay, so it's not on this one. All right. So you guys got that, right? You got. I've given you, what it is that we're trying to trade. All right. Our key trade setup. Okay. Exhaustion level. In or around accumulation, a weekly accumulation or distribution zone. Okay. After that, the confirmations that we look for is a directional arrow, a close below the 13 EMA, and then on the TDI, a close below the red signal line and the yellow sentiment market sentiment line, and some pluses are the crossing of above the 70 and back under the 70, or crossing below the 30 and back under the 30, like back here. Okay, just hopefully I don't think my my picture's not blocking it, but right here. Okay, we got the red signal line going under the 30, coming back up the 30, and then from there, again, you're waiting for the cross above the 13, and also the cross above, so the cross above the 13 on your regular chart, then on your TDI, you're looking for the cross above the red signal line and the red or the yellow market sentiment line. Okay. All right. Again, we already have our exhaustion indication, our directional arrow, so that's looking good. Another plus would have been a TDI hook arrow, which we didn't get here, but that's all good. Again, the main thing is the candle crossing the 13 EMA, and you're checking out in the TDI for the green signal line to cross the red, the green price line to cross the red signal line and the yellow market sentiment line. Okay. Okay. And then we also, other confluences, we're checking volume, and then also checking for the green signal line, or the green price line, the green price line to have crossed above or beneath the 70 or 30 overbought and oversold levels on the TDI. Then, of course, other confluences, another confluence we like to look for is the regular divergence. Okay. Not the convergence. Convergence is good for, I believe, for when you're in the trade and helping you to stay in the trade as well. But for me, I like to look for divergence, which is the regular divergence. And that, so we did have that here. And of course, you just would have been patient and waiting for the primary entry rules. All right. Primary exit rules for me is the form of the exhaustion level, and then waiting for that candle to close. All right, and then from there, I would just get out, even though, hey, the market, it may go further down. All right, but I would just go ahead and get out, especially if, like in this case right here, where on the TDI, it was close to like the oversold here. So if it's close to the oversold or overbought here, then go ahead and get out, and then that way you can prepare yourself to get back in, to catch the reverse. Okay. And so again, we already said that was 155 pips, and so if we would have waited for our um, our entry rules here, we got our exhaustion. We already have a directional arrow right here. Okay, now we're looking for the crossing of the 13 EMA, which would have been this candle, and then we're also looking to see if the green signal line has crossed, in this case above, I keep saying signal line, the green price line has crossed above the red signal line and the yellow sentiment line. And so if we take a look again up here at this candle, we can clearly see that we didn't get like a clean break, but we can clearly see that on the TDI our rule was met. Okay, this would have been a better entry, all right, for us, a more confident entry, even though, hey, it went against us for 80 pips there, but then it shot up and then came back down against us, but then we didn't get our exhaustion until here. Okay, so potentially you're looking at right now 103 pips. So 155 pips plus 103 pips is 258 pips. Okay, in a matter of what, 2 weeks? Okay, not even 2 weeks, but that's not bad. All right, trading that at a standard, that's $2,500 in 2 weeks. Okay. All right, so hopefully you guys, you see that. All right, you see what it is that I'm teaching you. Okay, so now that you have that, now that that is out of the way, all right, you have what we're trying to trade, why we're trying to trade it, and how we're trying to trade it. Okay, we have our entry strategy and we have our exit strategies. Okay, we have our confluences. All right, so let's go ahead and move on with the market watch, or the analysis. So just to let you know, GBP CAD is going to be my pair, and I'm going to tell you why. Okay. All right. So let's see. It's 3:41 p.m. Eastern Standard Time. This candle is not going to complete until 5 p.m. Eastern Standard Time. So we don't have anything right here to tell us to go ahead and get into the market. For me, I would love to see. This. 1 second, guys. Oh yeah, go ahead. Get your brother to help you. So I would love to see this to cross above the 70 overbought to come back below. Okay, but again, you know, we're waiting for our entry rule. All right, to cross below the 13, cross below the red signal line and the yellow market sentiment line. Okay, so we're waiting on that on GBP and ZD. GJ is not quite ready. I went ahead and drew in this supply zone here, right? And even though, again, it's not a accumulation or distribution, we can certainly take a look and see that this is a supply area right here. Let me throw this default on here. Okay. All right. And so all right. So okay. All right, GJ. Okay, again, let's go ahead and draw that in. All right, we do have a fresh supply area here. Okay, so it could push up a little bit more for us. We do also have a supply area right here that has not been breached. Give me 1 second. Let's take a look at. Just moving around on it. Sorry. I'm gonna do something really quick. just hide that really quick. So, okay, that was spot on. Just wanted to make sure we were drawing that supply area properly. Okay, so it's touching a supply area. We have an exhaust. So again, we wait for our entry rules, the crossing of the 13 EMA, as well as the red signal line and the yellow market sentiment line before we get in. Okay. So that's a good one to look at. GBP Swiss. You guys can see I've already kind of done some analysis. So again, we do have a nice supply area that our exhaust indicator came in. All right, we also have a high cross above the 70. So this is definitely ready to push down. So we want to wait until we get our entry, to make sure our entry rules are completely met. Okay, just like the video that I did today. Patience is key, and you do not have to get the whole of the move to be profitable. Just wait and make sure that it's time for you to get in. So again, we're waiting for the cross below the 13 EMA, the cross of the green signal line below the red, right? The red, we're waiting for the cross below of the green price line under the red signal line and the yellow market sentiment line. Okay. So GBP Swiss is looking good, and I like that pair as well as one to like really hone in on. Okay. Again, because we look at the other confluences. Okay. We have an exhaustion point with volume, the green price line crossing above the 70. All right, wait for that to come back below the 70, cross below the 13, and we're in. We can grab our Fibonacci. Okay. Just like the trade today, I don't know if you guys, hopefully you guys are following that GBP USD, but I called it. Right, I called it. We were looking for that golden zone, all right, which is the 50, between the 50 and the 61.8% retracement, and so we can really look for that to take place. I don't know why that did that. Okay. Throw the gold on there. So once this gives us our entry, okay, we can look for the first take profit to be here around one spot 26619. You might want to go a little bit above that. Here, let me throw some quarter points in here, and let's see if we get close to a quarter point. No. Okay, so it's up here at a quarter point. So, and that's what we'll be looking for. If we get our entry here soon, then we'll be looking for this move right here. Here again, first entry point, one spot 26624. Second, I'm sorry, take profit, not entry point. I'm sorry. One spot 26619 or one spot 26311 as the second take profit. First take profit, one spot 26619. Second take profit, one spot 263. But of course, I'm looking for one ADR. GBP Swiss is 102 ADR, so I'm looking at about 100 pip ADR. So that would mean that our entry would have to be here at one spot 27644. All right, so we wouldn't get in right there. We would just, it would just be nice if our entry rules were met, all right, completely around here to get our full ADR, okay, at take profit 1. But at take profit 2, our rules will have to be met around one spot 27336, which is more likely. All right, so that's GBP Swiss. So out of the ones that we've looked at so far, I really like GBP Swiss, again, because of the overbought situation that we have here. GBP CAD, same thing, the same reason. We have an overbought situation here, exhaustion point near a supply area. Now this is near a supply. This is near a supply area, so it's not the accumulation distribution on the weekly. We're kind of moving away from that with the GBP CAD. So this would definitely be in keeping with the current overall trend. Okay, so that's a plus on that. All right, let's take a look at GBP odd. We have another exhaustion indicator, also nice overbought here, nice volume. All right, well, the volume not so much in this case because we have some pretty good shift. I have a good shift candle right here, so that's really not in our favor. So we would just wait for, again, our entry rules to be met. Cross below the 13 EMA in this case, cross below the red signal line and the yellow sentiment line. I'm just going to start saying red and yellow, guys. So across of the green line below the red and yellow line, okay, then we want to get in, especially on the candle up under the 13 EMA that has volume with it, okay. GBP USD, same thing. I'm liking this overbought situation. You guys know the entry rules, so that's looking good. Euro NZD, I'm loving the oversold. So again, you just wait for the entry rules. Again, this would, in this case, this would be across above the 13 EMA, across of the green line above the red and the yellow line. Okay. So that's what we'll be looking for, and some good confluences for better confidences to catch a bullish candle that crosses above the 13 EMA with volume behind it. Okay. Euro odd, again, I'm loving this situation, oversold situation. So of course we're gonna wait for our entry. Okay. Now if you're gonna be aggressive, you could get in how I've taught you previously before in the past. Once you get a candle to close above the exhaustion signal, okay, so you could do it that way, but I'm telling you guys how to do it with the indicators we have here. Okay, so that would be more aggressive. Okay, you would set your stop loss. I would just set it up under all right, excuse me. So we have that. Okay, so again, I would just basically put my stop loss there, okay, and roll with it like that. Okay, if you're going to be more aggressive, if not, just wait. Okay, that's what I'm encouraging you to do. I'm encouraging you to wait. All right, wait for the crossing of the 13 EMA, then also crossing of the green, the crossing with the green of the red and yellow line on the TDI. Okay, gold. We're at an exhaustion point now. I would just wait for a confirmation. We don't have like an overbought situation here, but still, if we get that if we get that confirmation to get in, then yeah, we want to go ahead and get in and ride that down. Okay. All right. Oh, and you guys know to practice proper risk management, and that's basically half of 1%. Okay. So if you have a $100 account, that means that you're going to be trading at 50 cents. Okay. 1% of $100 is $1, and half of 1% is, or half of $1 is 50 cents. Okay. So I don't know if the proper way is to say that is 5/10 of 1%, but hey, 50% of 1%. Okay, that's what you should be trading at, because that's going to allow the market to have to go against you 200 pips. Okay, and so typically you won't. It won't go against you that amount. And then also I would get in on pairs that does not have news coming up. So I would do that. Okay, so that's gold for us. Okay, USD JPY. Okay, we kind of missed this, but we got confirmation here. Okay, we did have a overbought situation, but let's see, we did have a crossing of the 13 EMA here. The green line was below the yellow and the red right here. Okay, we're getting a little bit of a pullback because of the shark out of the water, but it definitely still has a ways to go. How do you get in on these moves that have already taken place? You can use simple support and resistance. We already have a low that was there, and so we're waiting, and we're waiting for price to cross below this. Okay, so, or you can wait for like a big shift candle, like a big engulfing candle, bearish engulfing candle to get in here. It's wicking at the 13 EMA. It has wicked here for the past 8 hours, or for the past 8 hours. So you can even probably drill down to the 1 hour chart and wait for an exhaustion to go down, and then you also wait for the entry rule. All right, that entry rule is going to help you whether you're scalping, whether you're intraday, or whether you're swinging with on the 4 hour or daily or weekly. Okay, those entry rules. All right. The cross of the 13 EMA, the cross of the green, red, and yellow TDI lines. Okay. So if you want to get in that, again, you can, on the hour, drop down to the hour and wait for an exhaustion level to pop up and get in that way if you want to jump in on this USD JPY. Okay. Or you can, on the 4 hour, you can wait for this to be, for that to close. But if it was me, I would probably jump down to the 1 hour. Okay, and just wait for an exhaustion indication, which is the gold box. Okay, and then wait for the crossing below the 13 EMA, and then the green crossing under the red and yellow line. All right. USD Swiss. All right. Man, all of our pairs are setting up nicely for us. We just got to be patient. So of course, again, we have our exhaustion. Okay, we will wait for the crossing below of the 13 EMA, and then also the crossing of the green price line below the below the red and the yellow line on the TDI. So further confirmations would be a downward white directional arrow, also a candle closing under the 13 EMA with volume. Okay, those are just some good ones. Then also, if price comes above the 70 overbought and then crosses below the 70 overbought. Now, I'm not saying like pick one of these things and go with it, but I'm saying all of these things together, right? All of those things Now the confluences, don't worry about that, right? Those are just helpful for us to be more confident in our trade. But the main thing we're looking for is the crossing of the 13 EMA on the chart, and then the crossing of the green price line, crossing the red and yellow signal and market sentiment line. Okay. All right, USD CAD. I'm calling out these USD pairs, but again, we have news coming tomorrow. But tomorrow at 8:30 a.m. Eastern Standard Time and 10 a.m. Eastern Standard Time. So you can still get in, if you want to watch it throughout the night, see if you get any good entry points, and catch a few pips. Yeah, you can do that. But I recommend getting out of the market before the news events take place. Why risk it? Just wait. Okay, just wait. NZD USD, again, we kind of caught that here, but you can see where this would not, we would have left this one alone, because look, we got across here, okay, on this one, but now we have an overbought situation, and we have a possible pullback, okay, that's taking place. And so I would just wait. I wouldn't touch it. It's just me. NZD USD, I just wouldn't touch it. Your USD, we see how it has blown past. Well, on the weekly, it's kind of testing this distribution here, but it may be blowing past here. So let's take a look at the daily. Yeah, it is blown past it. It's totally oversold, and so you would just wait. It is crossed above or below the 30 level. Wait for it to come back up. Also with your regular entry rules. Okay, if you're gonna do that. So what I would just do, again, H4. You can do it on H4. Okay, Aussie USD, that's kind of gone. Just wait. Just wait for that to come back. Okay, and then our Litecoin. So here's a good example of why we use proper account risk management, because again, we have our exhaustion level here. Okay, look at this, a nice oversold situation, came back. This particular candle, it did cross below the 13 EMA, okay, with some volume. But if you look down here, it's a TDI. All right, the green line did cross the red line, but it did not cross the yellow line. So we would not have gotten into that trade. Okay, we'll wait for another candle to cross below the 13. That gives us everything that we're looking for, which in this case would be the green line crossing below the red and the yellow line. Okay, then we'll get in on that one. All right, and some good take profits for you to jump on. Yeah, again, you just grab that Fibonacci tool. Okay, from exhaustion to exhaustion, exhaustion candle to exhaustion candle. All right, grab you a square. Oops, not that one. I made mine gold, but you can make it whatever color you want. But you grab your square. Okay. Now these are your mental take profits. So as long as you don't get a bullish exhaustion by the time it comes here, then that's what you're shooting for. All right. Those are your profit. Those are your profit goals right here. Okay. So you wait for that to cross. We're looking for at least one ADR, and this is Litecoin. So It's I know it says 497, but you really need to move a decimal over because this is really only 49 pips. So 180R around 49 pips will be here at 72.5, so 72 and a half price point. All right, so you know, that's from there to there. Then if we come here, you know, our entry point will have to be, our entry rules will have to be met here at 68.56 price point. So, all right, guys, that is the analysis so far. We have 1 hour before these 4-hour candles close, but again, we have some good setups. GBP Swiss again is a good one. GBP CAD was a good one. GBP Odd a good one. GBP USD is a good one. Euro NZD is a good one. Euro Odd is a good one. USD CAD, even though the news is getting ready to come out tomorrow morning, just be watchful with that. Euro USD is a good one. I like the oversold situation. Just wait for the entry points. And Litecoin as well. So quite a few pairs to choose from. I'll probably again go with GBP, GBP NZD. GBP Swiss and GBP CAD. I thought there was one right off of. Okay, yeah. So GBP Swiss and GBP CAD are the main ones that I will be looking for, and probably jump in and do some more trade follow-along videos. I guess I don't know. That's what I'm gonna call them. But you guys, of course, you know, you guys get the in-depth analysis. So that's what that is, guys. All right. So I will be seeing you guys around. Reach out to me if you need me. As always, please remember, if you stay in God, you will stay in control. I appreciate you for being a part of the Teach Me to Fish trading community. You guys help me out. Let's continue to get this thing to grow and to help other traders be more profitable in their trading. All right, guys, take it easy. Until next time, happy pip fishing. Bye-bye.